on Dubai Eye on 1. We've got quite the focus on property this morning, including, as you've heard there in our headlines, some new numbers out from the guys at Value Strat into the growing percentage of residential transactions here in Dubai being paid for in cash. Very pleased to be joined by Director and Head of Real Estate Research, Haider Tuaima. Haider, thanks for joining us.
Thank you.
Let's look at that headline statistic there. 81% of apartments and villas were cash purchases in Q3. Now, I know we're more of a cash market than normal, but what is normal for us?
Well, it was surprising for us to see it, but then when we dug through into the data, we found that this is actually not a huge surprise, because normally over time we're looking anywhere between 25 to 35% of overall residential transactions would be mortgage and the rest would be cash. So in Dubai, usually it is a minority of purchases as mortgage.
But that's still a little bit of a jump then from looking at sort of, 65, 70% up to 81%. Let's take a step back and ask what we would see in other developed markets when it comes to mortgage versus cash buyers.
Yeah, usually it's the other way around. Usually when you're talking about maybe a 10 to 15% cash versus 85% mortgage. What makes this market unique is the demographics, and it's the actual population. About 90% of us are expats, and it seems that the preference is to bring capital from their home countries and then invest here, and or opt for off-plan purchases, which is not considered mortgage, and therefore it is added to this percentage.
Right, so the off-plan could be skewing the numbers a little bit.
Yes, it's possible.
So what has brought us from the normal of 65%, this time last year it was around 70% that were cash purchases, to over 80%? Why the jump?
Well, of course, one of the biggest reasons, the rising interest rates, and that would definitely reduce the overall catchment of potential buyers. It becomes more expensive. And another reason, again, back to off-plan, where there are generous payment plans being offered, and therefore people are opting for the off-plan. And with the off-plan, some of the projects are already under constructions, and some of them are actually near handover, so they're going to wait for a very long time, and they have a generous payment plan. So that option is now available. That is quite a possibility that why it is skewed.
Is it a possibility as well that we're seeing more investor purchases?
Well, the data doesn't tell us whether this is investor purchases or not, but I do know that from last year, and due to travel restrictions abroad, we know that the market was mainly driven by domestic investments rather than from foreign investments. Now they are starting to come, and this is in 2022, and travel restrictions are eased mostly. We don't have many Chinese investors, for example. We don't actually have a number, and we can't actually say, but anecdotally speaking, it seems that we are having more end users purchasing this time round.
If I have a look at the value of these transactions, it's around 13% higher in terms of the number of transactions that we've had on sort of year on year for the Q3. But the value of those transactions has nearly doubled. So the value far outpacing the number of the deals themselves. Is that on the back of rising prices, or are we seeing more at the high end?
Well, we have more transactions this year than we had last year. As far as transactional activity, it's breaking record after record, quarter after quarter. And it's also important to mention, even with mortgage transactions, the value has gone up. So compared to last year, we're talking about a 30% increase. Now, the reason for that probably is because there's a skewness towards high-end properties. So while we have less number of transactions, but the value of mortgage transactions has actually gone up.
Let's have a look at interest rates. One of our other headlines this morning are those Fed comments that have come out in the last 24 hours, suggesting that we could see the rate of the rise calm down a little bit. We've had 4 75 basis point rises. The next one in December could be a 50 basis point rise. How much of an impact have rising interest rates had on who's taking mortgages and how many mortgages we have?
Well, it will definitely have an impact, as I said, usually on the affordability side of it. When for the EMIs, it means you're going to pay more. But on the flip side, if we go historically back to 2017, 18, and 19, interest rates were going up. Actually, there was quite an increase in take-up in mortgages, and that's probably because people wanted to lock in fixed mortgage rates for a few years. We are yet to see the overall impact. Probably in Q4, when we have our report in January, we will have more clarity on that.
Could we see an uptick if interest rate rises do slow?
In Dubai, anything is possible. It's very difficult to predict, to be honest.
What are you predicting, though? If you are having an outlook into 2024, what's it looking like? 2023, rather, what's it looking like?
We have the Value Strat Price Index, and we use that as a predictor. First of all, we've already mentioned that there are some areas, in fact, most areas in Dubai, particularly apartment areas in Dubai, have already reached their price ceilings. And seems that they plateaued and they're not changing year on year. We're expecting to have a slower growth of capital value going forward for the next 12 months.
Thank you very much for joining us on the show this morning. Haider Tuaima is the Director and Head of Real Estate Research at Value Strat. We appreciate you coming in and speaking to us this morning. Right, turning our